Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsarthi. And in this podcast, we are going to talk about the impact on bond investors due to the Shriram Group merger. And also, this is on a more general terms. If investors hold bonds of group companies, and if the merger, if and there's some mergers and acquisitions within the group, then how does bond investors get affected? Do their risk levels go up or down? Are they better off or worse off, etc.? So now coming specifically to the Shriram Group merger, Shriram, the National Company Law Tribunal has approved the merger of Shriram Transport, the flagship company of the Shriram Group, Shriram City Union Finance, and the Shriram Capital into one entity called Shriram Finance. Now, Shriram Transport is the largest of the lenders in this, while City Union Finance is also a large lender, but not close to the size of Shriram Transport. And Shriram Capital here is a very small entity into more of financial services. All these three are merging into Shriram Finance, and another company, Shriram Housing Finance, will become a subsidiary 100%, will become a wholly owned subsidiary of this Shriram Finance. So now Shriram Group has a lot of bonds that have been issued to the investors in the market. Shriram Transport have issued bonds. Many investors hold Shriram Transport bonds. Shriram City Union Finance has issued bonds, and many investors hold City Union Finance bonds. Then Shriram Housing Finance has issued bonds, and investors hold Shriram Housing Finance bonds. And also both Shriram Transport and Shriram City Union Finance collect deposits, fixed deposits from investors. And under a merged entity, the question is, whether individual bondholders, supposing if you're a bondholder of Shriram Transport, or if you're a bondholder of Shriram City Union Finance, or if you're a bondholder of Shriram Housing Finance, how will it affect you in terms of the risk levels of owning these bonds? Now, Shriram Transport is the largest of the lenders, largely into commercial vehicles, and its rating is AA plus. But having said that, their bonds have been trading at higher spreads or yields than other comparable AA plus rated bonds. So clearly, the market is factoring in that this bond has a higher risk, and this is largely because of the fact that NPAs have been consistently over 6.5% to 7%. It's come down from very high levels. It had gone up to over 8%, but then it's come down from those levels. The group is also leveraged. The balance sheet size is well over 100,000 crores. And the combined entity will have a balance sheet size of close to 170,000 crores. Now, this is a very large, it'll form one of the largest NBFCs in the country. And clearly, at these kinds of assets, it becomes a too big to fail kind of an NBFC. And RBI regulations will be very, very strong, given that any entity that has grown to very big, very large basis, they are not very, they have to be much more closely guarded and watched by the regulator to make sure that they retain the status of a too big to fail NBFC. Now, but for individual bondholders, one is that because of the holding of AA plus bonds by Shriram Transport, and Shriram City Union Finance has been rated AA, while Shriram Housing Finance is also AA. So we have to see what the rating agencies will rate the whole entity, which is Shriram Finance, as. Now, if Shriram Finance gets a lower rating than AA, say a AA plus, which is AA rating, then the holders of Shriram Transport will be holding bonds which they bought at AA plus rating. Now it's been downgraded to AA. But on the other hand, if the rating agencies retain the AA plus rating, Then the holders of City Union Finance and Shriram Housing Finance will be Shriram City Union Finance at least will be holding bonds which they bought at double A, now is rated double A plus, which is positive for them. On the whole, if the whole thing is because of the big size of the company and the over and the way rating agencies look at it, and supposing they get upgraded to triple A, then everybody, all the bondholders gain. But if they get downgraded to double A minus, then all the bondholders have a negative impact. It remains to be seen, but most largely the entity will be getting a double A rating, double A to double A plus rating, given that that's what the rating agencies have been rating. And the balance sheet definitely carries risk because of the high NPS and the high leverage. The capital adequacy ratio is good, and access to liquidity is also good. So it really it depends on how the rating agencies see it. But the market also has a different view, has a separate view from the rating agencies. Clearly, because market is always well ahead of rating agencies in in their actions. So if markets think already they have been factoring that Shriram Transport, which is rated double A plus, is actually trading double A kind of ratings, double A kind of levels. Markets already factored that maybe the a larger company will be double A rated. But even if they are double A plus rated, the bonds may continue to trade at higher spreads than their peer group in terms of similar rating bonds, similar rated bonds. Also, we'll have to see how the equity markets react to the whole new entity. The entity will be listed in December, and if to some extent, um, if there is if the equity market believes that this is not going to be a very strong proposition, then it may provide the right kind of valuations to the issue, and that may affect cost of capital as well, because sentiments do have an impact on borrowings as well. On the other, also to some extent, given that each lender is diversified, Shriram Transport is largely into commercial vehicles. City Union Finance is largely into other consumer loans. A well diversified asset base, and also a well diversified liability base. And if there is a well diversified asset base and a liability base, then there is a lot of comfort to the bond investors. So there are a lot of nuances like this, which may or may not affect bond investors. Here I'm just giving you the potential issues that bond investors of Shriram Transport could face, or Shriram City Union Finance could face. Having said that, at this point of time, there doesn't seem to be any kind of indication that the market is really taking this whole thing on the bonds negatively. The yields are continuing to trade where they are, and there has been no real negative reaction on bond deals of individual companies. Similarly, if some other companies like Shriram have their own mergers and acquisitions, bond investors would have to be well aware of all this. Hence, one of the prime criteria that bond investors will have to look at is that apart from investing in bonds of individual entities, they see what the whole group entity looks like, what is the leverage, uh, and if one company is borrowing more than others, and many other factors. So it's always better to look at a group level exposure, even if an individual is buying for single issuer. And also, it's always good to prescribe limits if you are a financial advisor in advising on bond portfolios. It's best to prescribe limits to and certain parameters, especially group level companies that have very belong to very large groups. Thank you very much for listening in. If you're a financial advisor, obviously, to see the best place to invest in Shriram bonds, or what kind of weights to give in, or what are the levels to invest in, or do you want to invest at all, is INR Bonds Partner Portal. They display all the bonds available in the market for you, view the most information, and enable you to take investment decisions for your clients. And for curation, for investors who want curated list of bonds, download the app Quick Invest by INR Bonds, where Shriram bonds are listed, and MLDs or NCDs. You can check the level, check the information, and check our own proprietary risk score and take your own investment decisions. And once you have taken it, the investment process is as seamless in our investment process.